you take into consideration the changing political landscape? Japan's just elected a new prime minister. What opportunities do you see there? What challenges do you see on the back of that?
I think the key in Japan is really the continuity of the policy, really starting with Abe, right? We've had a number of prime ministers since then, but each of these successive prime ministers has continued and expanded the reform agenda here in Japan. And our hope and expectation is this new prime minister will be committed to that same reform path. If that happens, I think the future is very, very bright for Japan.
What's the plan then, Joe? What's the plan for Japan? What is the strategy? How do you grow your foothold in that important market for you?
Well, there's an evolving marketplace here, right? So traditional private equity focused on corporate carve-outs will be our bread and butter. We're seeing more and more activity there. You're seeing more secondary transactions, more public to privates. So I think that speaks to how the private equity industry is maturing here. And beyond that, it's the emergence of new asset classes. So infrastructure investing in Japan is starting to pick up. The need for data centers and digital infrastructure is a really attractive theme. Energy in Japan is a critical issue for the Japanese economy. That's going to take a lot of capital and a lot of private capital to support that. You're also starting to see the emergence of private credit in this marketplace to partner and complement what the Japanese banks are doing. It's going to provide more risk capital and more sources of capital to Japanese companies and entrepreneurs. So there are a lot of different ways to scale our platform here in the market. And most recently, it's around insurance. We have a very large insurance platform called Global Atlantic. We are partnering with Japanese insurance companies to bring them solutions for their policyholders.
You talked about private credit, private equity, you talked about infrastructure. India comes to mind as well. This is one market that has enormous potential. How are you looking at the Indian market? They say that it is coming of age right now.
Yeah, India is an amazing country to invest in. After Japan, India is our second largest destination of investment in Asia. It's underpinned, I think, but by what everybody knows, 1.4 billion people, an incredible demographic story, an incredible consumption story. And you start layering on top of that, more recently, a manufacturing industry that's starting to blossom as well.
And what's the plan for infrastructure in India in particular? We know that this is a growing business for you. In fact, if you take a look at the numbers, it's grown from 13 billion in 2018 to 60 billion right now. And your Asia Infrastructure Fund has been looking to deploy capital, and India could be the biggest beneficiary. It sheds some light on the plan there.
Sure. I mean, India for us is a big destination for both private equity investments as well as infrastructure investments. Our Asian Private Equity Fund and our Asian Infrastructure Fund are the two largest vehicles in their asset classes in the region today, and India is a core destination. So already today in India, we've invested behind toll roads, transmission grids, renewable energy, and digital infrastructure. So I think we're just getting started, but it's going to be one of the largest destinations for infrastructure capital going forward.
It is hard to talk about Asia without looking at China. This is a huge market, but we know that when it comes to top PE companies, they've pretty much put a brake on, investing in the deals in China. What's your take on the environment there?
Yeah, given the current geopolitical climate, certainly the aperture of what's investable for us today is a little bit more narrow than what it was 5 years ago or 10 years ago. Our approach, though, is we have definitely not pulled back from the China market in terms of our commitment there. We just need to be much more tailored in terms of the sectors and the themes that we think are investable. Our focus really for the last 20 years in China has been focused on domestic consumption and value-added services, which we think is a sweet spot of the Chinese economy, actually. Just recently, we announced one of the largest control buyouts in China in the largest domestic branded soft drinks business, over a $2 billion transaction. So if it's in that sweet spot of domestic consumption, local champions, we're very, very excited to invest in China today.
Are you seeing signs of M&A revival? And what do you think it will take to see a real reversal in sentiment when it comes to the Chinese market?
I think the biggest catalyst, positive catalyst for Chinese private equity, the industry, would be a clearer path to liquidity, to monetization. The stock markets need to open up so investors can exit their positions more easily. And the M&A market needs to continue to expand. It's going to be more probably sponsor to sponsor in the next 3 to 5 years. The strategic bid from international companies is probably not going to come back as quickly in China. But as the Chinese stock market improves, that path to liquidity, I think, is going to be critical for investors.
Joe, let's take a look at some of the macro trends happening today. We've been talking a lot about de-dollarization, how investors are pulling back from the USD. Do you see that? There is a debate. Where do you stand on the issue?
Yeah, I don't think it's a question of global investors exiting the US market by any means. I think it's more a question of diversifying their portfolios with that incremental dollar. Where do you want to invest it? I do think it's fair to say that most global investors have a lot of exposure to the US right now. And as the US dollar weakens and other markets like Asia continue to have these fundamental tailwinds in terms of growth, I think you're going to see people diversify their portfolios more and more to Asia over time. And that makes sense in a multipolar world, right? As regional economies are becoming more important, as Asia is getting more dependent on intra-Asia trade and growth, I think you're going to see more and more capital flow to Asia. It doesn't mean they're pulling out of the US, though.
But do you see that getting momentum then, Joe?
I think it really depends on who you are and what your portfolio looks like today. You know, there are clearly some investors that probably have really very large exposures to the US, maybe a lot of tech exposure to the US, and are looking to diversify. There are lots of investors in the US that have very small allocations to Asia today. And I think that's going to start shifting as well with the incremental dollar of investment. They want diversification. They want access to the growth that people are seeing in Asia. And I think you're going to see more and more capital flow to this part of the world.